Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us is Caleb Silver. He's the editor-in-chief at Investopedia to discuss the Investopedia Investor Anxiety Index spiking again as investors across all ages and income levels changed their investing approach in April. Caleb, it's great to have you with us on Trade Talks as always. Tell us about the anxiety index because it's not your typical stock index, which is what makes indexing so interesting.
Sure. The anxiety index, in short, measures the level of anxiety our readers at Investopedia have as they search for terms that are typically associated with fear. So we track those across markets, we track it across the broader economy, and we track it across personal finances. In markets, anxiety terms are like bear market or correction. In the economy, it's things like recession, depression. But in personal finance, it's things like foreclosure, bankruptcy, the things that affect you personally. And what we've seen throughout the month of April, as the stock market was having this amazing recovery, was this turn, this divergence between the stock market and the real economy, especially the personal economy, where all of a sudden our readers were looking up things like bankruptcy, liquidity, foreclosure, terms that are associated with personal fear or anxiety around one's personal finances, not the stock market.
How are investors changing their approach, and are they split on their response to recent market events?
Sure, and it really breaks down across age and income level, as you might expect. So we did a survey across our newsletters, reaching about 600,000 people. We got about 1,200 responses about what our readers were feeling and what they were doing with their money. Older investors, especially those that had experienced the 2008-2009 recession and had money in the market then, have gotten a lot more conservative as soon as the April stock market started tearing up north. So they've gotten much more conservative and bailed out of stocks and bailed out of stock mutual funds and put themselves in fixed income, put themselves in high yield savings accounts, and put themselves in money market accounts. And as you know, money market accounts have a record amount of cash in them right now, about $4.9 trillion sitting on the sidelines. Younger investors went the other direction. They may have experienced 2008, 2009, but they know time is on their side, and they know that these policies that the Federal Reserve has taken and the US government usually help stocks, and they've been very aggressive buying blue chips, but also buying super risky airline stocks.
Yeah, it's really interesting to see the divergence of the approach because younger investors, I would imagine many of them, if not all of them, have not been through a prolonged period of volatility since we saw 2008, 2009. Some may remember, but they may not have put their money to work, whether it's trading or investing.
Right. I think it was early for them, and we've seen a ton of account signups at the online brokers across the boards, from Robinhood to Schwab to Fidelity. You see a lot of new accounts being opened, and you see a lot of trading activity. Some of it is being done by experienced investors, but there's a lot of young people who are putting money to work for the first time, either because they've never seen a correction like this, and they think there's going to be a lot more upside. They can't believe how far we've fallen, or they just think the stock market is the best place for their money right now and are taking a big shot at some very risky stocks. But you also see them buying blue chips, and you see those stocks that are leading the market, the big tech stocks that are also part of the Nasdaq 100 and the Qs. Those have been leading the market. You see investors of all ages, older investors plus younger investors, newer to investing, buying the blue chip stocks too.
As we go through the month of May, are you seeing any difference in terms of the words that they're searching, or is it too early to tell yet?
No, we're already seeing searches for terms like bankruptcy, or what happens to companies when they file for bankruptcy, or forbearance as one tries to not can't pay their mortgage anymore. We see terms like that, which tells us that it's become very personal for people. The stock market has taken off, and it's taken off because of the fact that interest rates are at zero, and the Fed is backing now the corporate bond market, but also hopes of a vaccine. So as the stock market has taken off, the focus again has gone internal as people start to worry if they've lost their jobs themselves or they're running small businesses. They're worrying about money, they're worrying about cash, and they're trying to raise it or hide out in safe places to preserve it.
All right, Caleb, as always, thanks so much for joining me on Trade Talks.
Thank you.
All right, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.